And look, a real thing that's true about Bitcoin is that if you think it's worth $1, it's really easy to imagine it's worth $1 million. It's harder to argue the 0 to 1 than it is 1 to a million. I think the world has accepted that it's worth something. So I think the people are licking their chops at the ability to buy it at these levels. Doesn't mean we go straight back up. Bottoming is a process. But yeah, I like that framing. If you have cash, it's closer to euphoria. These are attractive on a 10-year time horizon. Look, stablecoins are going to create an enormous amount of value in the world, right? They're an enormous, valuable technological innovation. They move faster, they move 24/7, they're available globally, they can lower the cost of payments. A huge amount of value is going to be created. The question of where that value accrues, I think, is a great question. My view as an investor is just buy everything that's associated with it because you'll benefit no matter what happens. But this was true in the early days of the internet, right? Was it infrastructure plays? Was it apps? Was it the large caps? Was it the small caps? The right answer there was to sort of buy everything and be kind of right.
Market downturns often reveal whether an asset class is weakening structurally or simply undergoing cyclical repricing. According to investment strategist Matt Hougan, the current crypto drawdown represents the latter. Unlike previous bear markets that carried existential uncertainty, today's environment reflects a maturing asset class experiencing temporary valuation compression amid accelerating structural adoption. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
If you're starting at 0, these prices are really attractive. I think I've been surprised. In previous bear markets, in FTX, the bear market felt existential. People were worried that Bitcoin was
go to 0, that we were dead, or the
Exactly.
industry would be gone in the United States.
In 2018, 2019, there was so much despair that there were those questions as well. And look, post FTX, that was actually reasonable, right? The infrastructure was collapsing and the regulator hated you. There was a non-zero chance that it was just going to be a long, long winter. This winter doesn't feel like that, right? Most people look at this as an attractive entry point. They don't see death and despair. They see the world getting more digital. They see rising concern about fiat currency. They see a 4-year cycle that would naturally mean we have a pullback. And they think that's an attractive entry point. So I actually think it's a better bear market than 2022. Well, you look at the fear and greed index. I do think crypto retail entered full bear market, right? It hit its lowest level ever.
5.
It's at 5. Yeah. If you want to think about an asymmetric opportunity, like put 5 on a scale of 1 to 100, it's way over here. So I do think there is that level of despair. It's just only in crypto retail. People who haven't bought yet, it's attractive, it's exciting. And look, a real thing that's true about Bitcoin is that if you think it's worth $1, it's really easy to imagine it's worth $1 million. It's harder to argue the 0 to 1 than it is 1 to a million. I think the world has accepted that it's worth something. So I think the people are licking their chops at the ability to buy it at these levels. Doesn't mean we go straight back up. Bottoming is a process. But yeah, I like that framing. If you have cash, it's closer to euphoria. These are attractive on a 10-year time horizon. Institutions love tokenization and stablecoins. We've talked about that before. They assume it's fait accompli, right? So that market is going to be many trillions of dollars. The questions now are valuation focused. Is Solana at $50 billion overvalued or undervalued versus the opportunity? Is Ethereum at its current prices over or undervalued? So it's a really interesting dynamic. Institutions assume everything will be tokenized and effectively assume everything will move over stablecoins. They're max bullish. It's just, are the valuations right? And I think that's actually a great question for crypto to answer. Look, Bitcoin, it's easy to argue, right? Store of value, $30 trillion market, it's going to $1 million. Very easy. On these other assets, I think this valuation question is the number one question to ask. When we do the math, we end up bullish, but not 100x bullish. I think that is the reality. Look, some of these are real businesses, like Chainlink is a real business. Solana has real GDP and real revenue. But the targets you end up with, again, are attractive, but it's not 100x.
It's not what people showed up for in 2017 and 2008.
No, it's a more mature market, but that's the market we're in. Look, I still think it's probably more attractive than parts of the AI space, where valuations have really soared. But we're going to get into like this odd part of being a value-oriented crypto investor. I think that's going to be one of the themes coming out of the market. So conversations are 50-50 Bitcoin and stablecoins and tokenization. So it's not Bitcoin and Ethereum and Solana, it's Bitcoin and stablecoins and tokenization. And then there's the secondary question of how you play stablecoins and tokenization. What we see there is people just don't know. And so what I think we're going to see is them just buy companies that are building on that space and a suite of crypto assets that are building on this space. I don't think people will try to pinpoint one or the other. I think they're going to sort of take a diversified approach to that. Look, stablecoins are going to create an enormous amount of value in the world, right? They're an enormous, valuable technological innovation. They move faster, they move 24/7, they're available globally, they can lower the cost of payments. A huge amount of value is going to be created. The question of where that value accrues, I think, is a great question. My view as an investor is just buy everything that's associated with it because you'll benefit no matter what happens. But this was true in the early days of the internet, right? Was it infrastructure plays? Was it apps? Was it the large caps? Was it the small caps? The right answer there was to sort of buy everything and be kind of right. I think that's probably the right answer here. Narrative matters. And these are, again, you have to think of this as like a Series A startup. What are you looking for in a Series A startup? You're actually not looking for high revenue. You're looking for growth of use and growth of revenue. That matters more. I'd rather have a fast growing thing than something that has a lot of revenue but is growing slowly. I think that's the right mental framework. But narrative will drive a lot of it. If people assume Ethereum is the play, Ethereum will do well for a while. Ultimately, it'll peel back to this value though.
Perhaps the most consequential element of Hougan's outlook concerns the institutional embrace of tokenization and stablecoins. He describes a growing consensus among major financial players that digital tokenization of real-world assets represents an inevitable transformation of financial infrastructure.
It's a big battle. It's a big battle. You can see right now the sort of mechanics of Wall Street kind of capture that within its own blockchains and its own isolated areas. My bet is on open source. My bet is on global and diversified. But again, I think that's an uncertain bet. If you look at the history of technology, usually open and global wins, but not always. Sometimes the captive network dominates. Sometimes there's regulatory capture. I think we'll find out, but I actually couldn't tell you which side of the ledger. My bet, again, Ethereum Solana will be the backbone. That's actually my bet. But I think you can't be certain about it. Look, it's a classic infrastructure build out. What always happens? There's always a shortage, and then there's always a glut, and then it always fills up in the end. That's what happened with internet bandwidth. That's what's happening with AI chips. There'll be a glut of AI capacity at some point for sure, and then AI will eventually suck it up. The interesting thing about crypto, we don't talk about that much, but you're right. We were bandwidth constrained. Now we have way too much bandwidth, and eventually we'll fill it up with the $300 trillion of tokenized assets that are moving on chain. I think the big winners are likely to be the leaders right now. I think it's likely to be Ethereum. It's likely to be Solana, but you can't discount some of the more interesting new ideas, right? Can't discount what Canton is building.
Well, that one's the one that blew my mind.
Absolutely. And they're doing real revenue and they have real partnerships. They're very well run. You need exposure to that. You can't discount Layer 0 launching, right? It's early, right? It's early. In any technological boom, when it's early, you can't be certain the leaders will ultimately win. That is the bear market where good news is stored as potential energy, but not recognized immediately. And you're seeing that as well. I mean,
every day.
I think Uniswap didn't move enough on the BlackRock news. I think that is the pure sign that we're in a bear market. But there are these fundamental good things that are happening. And yeah, Canton is a good example. Thing you're confident in, or I'm confident in, is tokenization, right? Will be hundreds of trillions of dollars. Will it be specialized chains? Will it be a few chains? Will it be geographically located? Will privacy play a role here? How easy will it be to move across chains? I think all of that is uncertain. I think own the field. Look, every investor probably 80-20s it, right? You need 20% that you're a degen and speculate on because we're humans and we all have views. I think you just need to bucket that as your 20% so it doesn't affect the 80% where we're just betting on crypto, Bitcoin, tokenization, stablecoins for the long haul. I think it's like the Steve Jobs moment returning to Ethereum for Vitalik. I think it's going to make Ethereum one of the leaders out of the bear market. I think it gives it narrative juice. I think it's the right thing for the chain to do. Look, again, it's the same story. It really was constrained, right? Remember when transactions were spiking to $100 each? It was stupid. And so they needed an emergency solution. The emergency solution was layer 2s. They now don't need that.
What does that mean for layer 2s now, though?
It means they're going to be ultra specialized, and they're going to be more sovereign, and and they'll try to, maybe their market is smaller, but it is specialized. But that's just the nature of this market. And again, it really points to the unknowability at this early stage. But I do think it's going to make Ethereum one of the leaders. It needed a narrative push. Narratives contribute to leading you out of bear markets. It now has that, like, that Steve Jobs returning to Apple style idea. And I think it's going to be one of the leaders. The even crazier thing to me was Martin Small, their CFO, saying we're going to tokenize all of our ETFs in the next 3 to 12 months. And I know that sounds like a long time in crypto Twitter, but if you're at a big bank, 3 to 12 months means it's basically done, right? There is no chance it's not happening. That's the world we're going to be in 27. BlackRock's on Uniswap. All their ETFs are tokenized. It's hard not to be bullish when you think about that world, but the market isn't paying attention to it. Yeah.
BlackRock literally had to buy Uniswap for this to happen, correct?
Yes. Yeah. They took a strategic stake in Uniswap. This is probably just the first thing they're doing. They are not going to miss this train, right? BlackRock, remember, missed the last big financial innovation, which was ETFs. They had to buy their way in. They bought iShares. They weren't a native ETF issuer. They're not missing this tokenization DeFi. I think DeFi assets in general are probably undervalued. I think Aave is probably I know the tokenomics is not perfect. I think those can be fixed.
I agree.
But the usage and the growth, I think it's like 10x, 100x growth. These systems are incredibly robust, right? Incredible uptime through massive volatility. And yeah, institutional DeFi is going to be another one of the narratives that leads us out of this bear market. And I think people really underestimate the scale of it. For the institutions that didn't allocate in 2024 or 2025, they're licking their chops. I know in Twitter land, we're worried about this volatility. They're not surprised that crypto is volatile. Like, wow, crypto is volatile, right? They've been waiting for an entry point. They take their time. We had net inflows last week when the market was down sharply. I think institutions are the marginal buyer. I think they're going to continue to come into the market. The average Bitwise client takes 8 meetings before they allocate, which is brutal. But they meet quarterly. We're about 2 years into the ETF boom. So they're like just now getting ready to allocate. It's actually just completely normal. It's the passage of time. Lucky them, they're buying at 60 and not 120. But I think it really is that amount. They wanted to allocate to this space. They finished their due diligence. They're ready to go. And they happen to have a great entry point. Well, I think they also look at that 4-year cycle. We're in the negative part of the 4-year cycle, but guess what the next 3 years look like in that chart, right? They are looking ahead. These people are making allocations for the next 5 or 10 years. I think even if you talk to the most bearish, despairing person on crypto Twitter, and you ask them where Bitcoin will be in 10 years, they're going to be pretty bullish. I think that's the timeline that these people are moving on. So yeah, again, they're not shocked that crypto is volatile. They know this is part of the thing, and they're excited to take advantage. Really, the pitch is we're built to serve the advisor community. So there's no other crypto asset manager I know that has 25 full-time salespeople that will show up in their office, that is a team of researchers that will answer any question that gets asked in 24 hours. We're sort of built to serve this advisor community. Other people are built to serve different communities, just how we're architected. That usually wins. I could say we're 25% cheaper than BlackRock. I definitely say that. I could say that we donate to Bitcoin core developers. I definitely say that. But in the end, these advisors want someone they can call. And that's sort of what Bitwise built its business to do. It is a series of sequential waves. And then there are other people who are moving slower, right? University endowments may meet with us once every 6 months or once every year. Insurance companies may meet with us once every 6 months or once every year. So it's not one institutional community. It's like 10. And they're all moving on the same path, just at different rates. It is a rising series of purchases. Look, eventually Bitcoin ETFs, I think, will at some point have $1 trillion of assets in them. They're not going to go down from here. It just takes time. So RIAs, which are independent financial advisors, they're not tethered to a big corporation. Those are the first people to buy. They're already allocating in size, something like 30, 40%, I think, are thinking about or buying. Usually they left a large company where they got their business started to go independent because they wanted to make independent decisions. So those are the pointy tip of the spear. The next is people who work at wirehouses, and Morgan Stanley, Wells Fargo. They need the wirehouse to bless them, and then they can start learning. That process just started last quarter, right? You also have family offices, which are quasi-independent, and they're moving pretty quickly. And then above that, you have true institutions. You have insurance companies, pensions, endowments, foundations, sovereign wealth funds, central banks. Sort of in that order that I spoke, they'll move progressively slower. But we're going to get all the way down the stack. This is exactly what happened with ETFs. It's exactly what happened with every asset. It starts one place and it expands throughout the whole stack.
Hougan's macro perspective presents a coherent interpretation of the current market phase. Volatility persists, but structural adoption accelerates. Institutional capital advances steadily, tokenization approaches inevitability, and digital asset markets transition from speculative frontier to emerging financial infrastructure.